Good morning, Paul Georgie from Allendale. It's October 20th, Thursday morning, and the morning starting out here with a lot of headlines out of Europe. The Greece Parliament did pass the further cuts to their austerity plan. You've got the news headlines creating differences between France and Germany on passing the money to help the bailout, and therefore you've got just a tremendous amount of headline news that are giving headline traders the control of the market here, it seems like, for the near term, as until we can get some solid information on the debt situation and how it's going to be handled. So that is one impacting factor to the market. The other is the USDA released their grain export sales here this morning for weekly numbers. Corn was expected 1.7 to 2.5 million tons, came out 1.76, so right at the low end of the range. Soybeans 700 to 1.2 million was expected. 594 is all the sales that we made in soybeans last week, and wheat 490 to 600. Came in at 399, so at the low end of expectations across the board. Certainly can't be very encouraging for demand, and that could weigh on the market a little bit, but not all that much, as we are trading futures and not something a week ago. So that will certainly temper some of the enthusiasm. However, the also other news: Ukrainian president did announce yesterday that he is cutting or doing away with the export duties on corn and wheat out of the Ukraine, which opens up the opportunities to sell more grain to the world there. Other news around: we've got weather. South America seems to be ideal from our weather forecasters' perspective, that they are expecting more rain this weekend. They've had some wet periods and dry periods and wet periods again. Certainly ideal situation to get the crop in the ground and off to a decent start, and also helping the wheat crop as it matures and gets close to harvest. So look for the grains to stay in a trading range. We had a sell-off here overnight near support in the corn, this December corn, down around the 632 area, and upper end of the range 650 seems to be the catch-all here in the near term. A breakout of either direction here certainly is going to help that market move probably 10 to 15 cents in the direction of the breakout very easily. We've seen that happen in soybeans last night as well. We took out November bean support and the 20-day moving average. Once that was broken, we went right down to the $12 area where many people have talking about support, and we've bounced back since because of the weakness in the dollar and the hopium that the European currencies are going to survive this. Well, since that time and since that rally, we've seen the dollar strengthen here, and so it's going to leave us with a mixed opening, I believe, with some of the other news like the export sales not being very supportive. We could see markets open slightly lower, but a lot of it's going to depend on where that dollar and where the crude oil is trading at 9:30 when these markets open again. In the livestock trade, cutout values there and the beef, not much change there, slightly higher. Pork cutouts were quite a bit higher again yesterday. Got to attribute that to export business, and because of competitive meat supplies, it seems like there's plenty of meat around here in the U.S. So therefore, this strength in the pork product would assume that we're going abroad with it. The cattle on feed report that's coming up here on Friday afternoon at 2 o'clock. Cattle on feed average for the trade estimates anyway are 103.9 on. Placed at 96.5 and marketed at 100.6 is what we're seeing as trade averages right now. And the key number there is going to be that placement number. The ideas there that the USDA does pull a trick on us once in a while, and have surprised the trade by seeing the opposite of what we expected last month. We thought we'd see larger placements last month, and they came in lower. So there could be an adjustment there, something to watch for. But certainly you've got to, when we look at the numbers and the facts, you'd expect that we'd see tighter or less placements than we did a year ago. So leaves room for some surprise here as we go into the report tomorrow afternoon. So look for a choppy day again today, and if you do have any questions, we'd like to answer them for you. You can just give us a call here at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.